Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendahl with tonight's Deep Dive. It is November 1st, 2018. We're going to take a look at crude oil today. The ETF is SCO. For some of people, they've been asking this question that they see that the ETFs change every so often. If there's an inverse ETF and we're short the market, then we're going to show the inverse ETF. If it's a market that is long as far as the ETF, then you'll see a long oriented type thing. If it doesn't have an inverse, then it's always going to show the long ETF. But with our positions right now being short crude oil, SCO is the ETF that we're going to be looking at. So let's take a look at the trends here. It's kind of a mixed bag with the trends. The little asterisk represents the fact that there is ambiguity here and that they're not all in lockstep. We have the technical rating, which is based upon a lot of different technical tools all coming together within a single rating, and that one right now is still positive. I believe that will start to change here fairly quickly. The driving force here is the seasonal tendencies to the market, and the thing that kind of worries me a little bit, even though we're short the market, is we have a support gap. So we're going to talk a little bit about that this evening. We're not really seeing too much happening here in crude oil as far as any of the pro alerts. We had one that showed a low a couple of days ago, but this is not the most profitable one here. And then when it comes to the weeklies, we don't have anything that's showing up right now in crude oil. So there's nothing that's really, for the most part, supporting this market, and that's reason for concern for some of the people that are actually long the market. So let's take a look at crude oil just to show you what did take place. Daily bars here for crude oil. You can see the downtrend that we've been under. This is the support level that we've been watching for quite some time, feeling it was going to probably come down to this level. With today's action, we actually broke a little bit below it. The specific number in this here particular case is 63.82, and we're a little bit below that. If for some reason this doesn't hold, the next level down is 62.38. That'll give you an idea as to where support to the market should be. But there's a gap, and there's a major gap that is starting to pick up here, that if these levels don't hold, then the market could actually start to accelerate to the downside. Let's go back to the website here real quick and just show you the targets here for crude oil. Here's this gap that I was talking about. It's a ways away, but we could see a big gap between 62 1/3 and 60. So that's a pretty good sized gap that is looming out there. Not saying it's going to happen tomorrow, but it is something that you should be aware of, that if there's an accelerant to the downside, there's not going to be too much that's really going to hold the market. When it comes to the seasonal tendencies, crude oil is number 4 on the list as far as those that are most accurate. And no surprise there that we often see with crude oil a sell-off into the tail end of the year. So this little triangle, it's kind of hard to see, but this little triangle represents where we are right now. So that'll give you an idea from the 5-year chart, which is what this blue line represents. This is what the seasonal tendencies we'd be looking at. It's not going to be until mid-December that we'd see some type of a legitimate base to the market, and that's not going to hold that long. If we look at the 10-year charts, it's not quite as pronounced, but you still see a downtrend to the market. And if we combine the 5, the 10, and the 15, they're all showing the exact same thing as far as a basic trend to the downside. Now there are bounces along the way, so don't get me wrong, there's tradable opportunities, but the general trend is down until the first week, second week of December, and that's when we'll start to see a more legitimate trend as opposed to these volatile swings that might be out there. And then we'd have another sell-off going into next year, and then essentially what we see is nice trend to the upside for the first part of the year and a trend to the downside for the remainder of the year. Obviously tradable opportunities along the way. Now, where do we stand with our trades? We've got two trades that went short the market yesterday, and we had another one that was short from the 23rd. So we're well positioned should that support level that I was referring to, if they don't hold and that support gap should be triggered, then we could be seeing some nice sell-offs here. We'll see how things kind of react to those two levels that I referred to, but I just want to at least prepare you for the opportunity that the trend, as volatile as it may be for the remainder of the year, we could see up and down moves and eventually break some of those particular levels, and that support gap will certainly come into play. So just remember that is out there in your day-to-day trading if you trade crude oil. The other thing, such a pretty chart that I had to show this one. This is all of the active systems that we actually have right now and a breakdown of where the profitability is coming from. But here's the energy market making up 12.8%. But it's kind of a fluke, but just look at the symmetry that you see here. This is where diversification comes from, that our systems, for the most part, long and or short, the way that they're set up, the allocation that is given to them, we're just making up a nice little pie chart, and something that you may want to look at. I haven't really shown this particular chart, but it is certainly out there, and if you're ever interested, you just simply come to signals, over to recent, and the very last one down there, the active allocation. That will give you the breakdown as to where the allocation is for the individual system. So we don't always get this almost perfect symmetrical pie chart, that we have right here, but it is something to understand that diversification comes from the allocation of all these systems, and sometimes the pie wedges get a little out of whack. It just so happens that things are just perfectly designed right now, and I'm just kind of proud of the diversification that this program that we show up on our website and all of these deep dives, it is there for the purposes of diversification, and this is what it actually looks like in action. So with that, we will take a look at another market tomorrow, and we'll see how things kind of play out from there. Watch that support level. It's going to be critical. Thanks again for watching. Bye-bye.